Meanwhile, we have had lots of earnings stories in this country this week, and that includes numbers from Canada's grocery giant Loblaw, the company's performance once again being well received with investors. We can show you what's been happening with the stock price recently. Strong performance for Loblaw shares, especially when you compare it to what's been happening with the TSX this year. Of course, grocery stores are on the front lines of the economic stories we talk about each day, specifically how Canadians are navigating things like higher interest rates and, of course, inflation. As such, the industry itself is often navigating criticism on how it fits into the story. So we wanted to take a look at what's happening through the lens of the numbers. To do that, we're joined by Loblaw CFO and President and CFO of George Weston, Richard Dufresne. Richard, thanks very much for being here this morning. Appreciate it.
Great to be here.
First of all, just what the business is,
yes.
The makeup Loblaw, how would you describe what's happening right now?
Business is doing well. Yeah. We've started to experience a shift to discount in mid-2021 when inflation got going, and that shift has continued. So that's what's leading our business, and the biggest proportion of our sales is in discount food. So therefore, we've been benefiting more than others because of this exposure, and that's the same thing that we saw again in the first quarter of this year. So
the worries that some consumers have, you've been ready for that by having the various brands that
inflation has been a big issue for Canadians. I know it's been difficult for many Canadians to go through this, but if you look at around the world, Canada has had one of the lowest inflation amongst countries around the world. But it doesn't relieve the pressure and frustration that Canadians have. But like when you look at what we've been doing, definitely we've been putting more focus on our discount business, building new discount stores, and that will continue going forward.
Can you elaborate a little bit on that, on that expansion story?
Yes, it's been clear to us that the future of our business is through new stores, and it's through new discount stores. And so this year, it's the first year where we're going to be building close to 50 stores. Half of those will be Shoppers Drug Mart. The other half will be food stores, but most of those will be discount stores. And so that's a trend that you will see more of us doing going forward, because that's where we see demand is going, and you get a cheaper basket at a discount store.
Interesting. And because in your latest quarter, you saw growth in your traditional grocery stores, but you see the growth in the drugstores as well, and increasingly people are shopping for similar items sometimes in both locations. So how much of that discount idea has to sort of carry through to both of those business lines?
It's actually carrying throughout our businesses. Like, we're developing promotion strategies to be able to provide value to Canadians throughout our network. And I think that's one of the factors that's resonating with our customers.
And obviously, I said this earlier, the grocery stores in many ways are on the front lines of a tense issue because of the economic realities right now. And some people are paying a good portion of their paycheck when they go to the grocery store. So the prices they're paying there are a source of frustration. This gets a lot of attention in Ottawa. You know this very well. But you did share some numbers specifically in the quarter about what your prices, how your pricing is playing out compared to things like inflation. So what would you say to those who have, for example, protested the prices in your sector?
Yeah, so we're doing everything we can to keep prices low. And the way we measure it is comparing our internal inflation measure, which is a subset of CPI, to the food CPI. And it's been 3 quarters in a row now that our internal CPI number is lower than the national food CPI number. So therefore, we are a factor in bringing food prices down in Canada.
One of the other factors is that people, they do go to the grocery store, but increasingly they're shopping just about everywhere, and that includes online as well, which is a pretty robust part of your business, a growing part of your business as well. Can you break that down for us?
Yes. We have close to 50% market share in online food in this country. It's about 5.6% of our sales, and it's been growing at the 16% over the last quarter. So it's a healthily growing business. And so we want to be able to serve Canadians whichever way they like, whether it's in our store and online. And so we do a good job, I think, in both areas.
And you mentioned market share. This comes up, too, because people talk about how competitive our industry is.
Yes.
And you hear about this all the time in Ottawa. And what else should we do? And should there be foreign players that have a bigger opportunity to enter this market? But what we have seen in the stock market, and we're showing Loblaw shares right now, is there does seem to be a view that Loblaw has generated its fair share of the market through the way they operate their business. So can you talk to us just a little bit about the difference between
for me,
a competitive
for me, Canada is probably one of the most competitive grocery markets in the world. Like you've got all the big global players here. Okay, so we're not isolated in our own market, and so therefore we need to fight every day to win our share, and it's by our promotion strategies, our store network development that we can win, and it's a grind. Like the grocery business, it's an execution business day in, day out, and if you execute well, you do well.
Now, you have a pretty successful loyalty program in Optimum. How does that fit into this business strategy longer term
Optimum is
too?
another tool to provide more promotions to our customers. Like some customers respond more to flyers, some customers respond more to loyalty. So again, it's a set of tools we use to just keep customers shopping our network.
During earnings season, we've also talked a lot about technology, how companies are implementing technology right now. That's become a bigger part of your business, obviously not just through online, but in store as well. Your business has also been concerned about things like theft as well. Can you talk to us about, as you implement new technology, what's the balancing act there? What are you guys thinking about right now?
I think organized crime is definitely the issue here. This is not shoplifting. This is what we've been facing since the onset of inflation. So we've invested in stores by putting gates and barriers just to make it a little more difficult for the thieves to go in or go out. And we added labor, and so those are working because we're seeing our shrink numbers starting to come down. And we have ambitious targets for this year, and we're well on our way to reach them.
And obviously, there's a balancing act, too, because you want your stores to be customer-friendly.
Yes.
On that issue, if there's organized crime involved, what's the bigger strategy? Are you guys able to lobby or talk to Ottawa on issues like that?
We are always lobbying as much as we can. But we also need to deliver a great customer experience. So we need to balance both, as you just said.
And Richard, just a final question, because your stock has been doing quite well, and you had some dividend news as well this week. So when you think about allocating capital from here on out, how does the dividend story play into that?
For us, we really want to be growing our dividend every year. We try to increase it in line with our earnings, and that's what we just did again this quarter.
Okay, Richard, appreciate the breakdown. Thanks so much.